The global foreign exchange market never sleeps. Operating 24 hours a day, it generates a massive, continuous tsunami of pricing data that completely overwhelms baseline human cognitive capacity. This constant barrage of fluctuating numbers exacts a heavy psychological toll. Staring at endless price movements naturally triggers a retail trader's two greatest enemies: fear during sudden drops and greed during rapid climbs. By the time your brain processes a price movement, feels that emotional response, and decides to act, the opportunity has often passed. Manual analysis cannot keep pace with the inherent speed of modern market shifts. Trying to survive in a market of this scale using only manual charting and sheer willpower places you at a severe structural disadvantage, virtually guaranteeing inconsistent results. If you look online, you will inevitably find aggressive marketing campaigns promising that AI trading bats are magical, set-and-forget money printers. The reality is that no artificial intelligence can predict the future. There is no algorithm, software, or system that can guarantee a 100% win rate in the foreign exchange market. Top-tier AI tools in 2024 function as analytical co-pilots. They process massive datasets to identify high-probability windows where the mathematical odds shift slightly in your favor. The real advantage is systemic. This software enforces a data-driven workflow that prevents a single moment of human panic or greed from ruining a week of progress. What looks like a chaotic cluster of market pricing is rapidly organized to identify high-probability setups. By cutting visual clutter, analytics isolate specific nodes of actionable logic. Modern platforms utilize no-code interfaces, allowing you to build strategies by snapping together modular visual blocks. This leap in software accessibility democratizes algorithmic trading. Retail users can now deploy the exact same institutional-grade data processing used by professionals, purely by adjusting a few simple parameter settings. Analysis is useless if you cannot execute the trade. To solve this, modern AI tools integrate directly into industry-standard brokerage platforms like MetaTrader 4 and MetaTrader 5. They achieve this through plugins called Expert Advisors, or EAs. An EA is a dedicated script that bridges the gap between the AI's analytical insights and your brokerage account, allowing the system to place trades on your behalf. Once a position is live, the EA executes dynamic risk management. If the market turns, the software automatically adjusts stop-loss and take-profit levels in milliseconds. Automating execution removes the hesitation of manual clicking. It enforces strict emotional discipline precisely at the moment your financial risk is highest. Because the Forex market is highly diverse, you have to align your chosen AI tool with your specific operational timeframe. Take a scalper, a trader who opens and closes positions within minutes. They rely on low-latency AI designed for high-frequency, real-time micro-pattern recognition. Compare that to a swing trader who holds positions for days or weeks. Their strategy requires an AI that specializes in broad macroeconomic data processing and long-term sentiment analysis. These tools are effective only when they reinforce your core strategy. A scalper's algorithm will identify thousands of micro-patterns that a swing trader's model would intentionally ignore. Even the most advanced models face limitations during high-impact news events, like the release of non-farm payrolls, a major U.S. employment report, or CPI inflation data. These announcements trigger extreme market volatility. These fundamental shifts act as black swan events that completely defy historical patterns. When the market behaves in a way it never has before, predictive AI models are rendered temporarily blind. This is why maintaining a human in the loop is a mandatory protocol. Traders must monitor the economic calendar and manually pause their automated systems during these massive geopolitical shifts. While algorithms master the probabilities of stable conditions, human judgment remains your only defense against unpredictable fundamental chaos. AI systems process thousands of patterns in milliseconds, identifying high-probability setups that are often invisible to the naked eye. By filtering out the low-quality noise that leads to human error, traders frequently see a 15 to 25% improvement in overall execution consistency. With the software handling the data, your primary job shifts from reading charts to managing overall capital. This requires strictly enforcing a maximum risk of 1 to 2% of your account balance per trade. Comprehensive ecosystems like FXNX, featuring tools like NX AI and the NX Learn platform, serve as an accessible gateway for retail traders to adopt these professional-grade tools. True financial success in modern Forex requires a deliberate balance, merging the emotionless precision of algorithmic execution with highly disciplined human risk management.